Welcome to Master Your Money, the podcast that teaches you how to take control of your hard-earned money, all while living your best life. I am your host, Elizabeth Hiza, Chief Marketing Officer at the Barnum Financial Group. I once felt powerless when it came to managing my finances, and my attitude follows suit. Until one day, I changed my mindset, built up my knowledge, and put myself back into a financial position of power. And I started this podcast to provide you with the same education and advice that I received on my journey. Now, I want to help you master your money. All right, Master Your Money listeners, welcome to today's show. We are here with Myles Holley. Myles is a P&C specialist, a property and casualty specialist with the Barnum Financial Group. Myles has been living in this world for over 15 years. So there is nothing this man does not know about this space. I asked Myles to come on to the show today because, obviously your P&C coverage is required. We all have to have it, but nobody really gives it the time of day to understand their coverage, to understand what some options are, to understand where they could potentially save money, to understand where they have to spend money versus saving money to otherwise protect yourself. So I wanted to have him on to share everything he knows to help us protect ourselves better and potentially save a few bucks in the process. So Myles, welcome to the show.
Thank you for having me.
Our pleasure. All right. Why don't we start with the basic? Can you start with just defining what P&C coverage is for the listeners out there?
Sure. So P&C is basically, if you can live in it or drive it, it can be covered under some form of P&C policy. So a lot of people think of it as just auto and home, but there's some other stuff in there as well. We always say that you're only going to use these things on a bad day. Mm-hmm. So it's our job to make sure it's not worse because of gaps in coverage, things like that. Everyone thinks of it as, repairing your vehicle or building your house back or repairing some damage like that. That is sometimes the optional side of things, whereas we focus more on the liability protection side because, it's your personal assets that are at risk when, you get into a car accident. So if anyone is really injured or decides to sue you for any reason, that's what these policies are really designed to protect. And that's where, we come in to properly advise our clients on how to properly protect themselves from that worst case scenario.
And when you say personal liabilities, what are you referring to? Like, what is at risk if God forbid you get into a fender bender on the way home or worse?
There's generally 5 categories of assets that we talk about. It's going to be things like savings, investments, home equity, future wages is a big one. And then certain but not all retirement accounts. All that stuff is fair game for a liability settlement. So when you see all these commercials on TV for like personal injury attorneys and how they, protect their clientele, usually that's what they go after in a liability settlement they're going to look at what coverage you have on your underlying policies. Then if you have an umbrella policy and if you don't, that's when all those personal assets are at risk kind of thing.
So the coverage will cover you for that. That will protect all of those assets if you're covered properly.
Correct. You need to have certain requirements underneath that to qualify for what we call an umbrella policy. But yeah, that's what they are designed to protect at the end of the day.
That's a lot. That's a lot. That's your entire life right there. That's your entire financial plan right there.
Yeah. As a financial planner say, what's your biggest asset? And a lot of people say it's their home, but it's really your ability to earn an income.
Yes.
So, having that wage garnishment could be a huge impact on your personal asset growth. We want to make sure that stuff doesn't get touched.
Sure. So that's exactly why I wanted to have you on the show today. Because like you said, you are protecting people's most important asset. Do you feel like the folks you work with, do you feel like in general consumers are educated when it comes to property and casualty or when it comes to their own coverage?
For the most part, I'm going to say no. When you see the advertisements for these types of products, it's usually geared towards price or, how cheap it is or how easy it is or only the coverage for what you need. But unless you really know what you are doing, how do you know what you need?
How do you know what you need?
So there's a lot of misinformation out there as far as, what this should be. As far as coverage wise goes, some people do want, just give me the cheapest thing. I don't want to pay for something that, I'm never going to use. But then when you do have to use it,
Yes.
you're going to want to make sure that you actually have the right thing in place, because there's just so much at risk. And it's not really talked about or advertised well enough to really show what these things are supposed to be doing.
And that goes back to your opening statement of, yes, you hope you don't need them, but if you do, and chances are, I would imagine, and I don't know the stats, you would know this more than me, but chances are at least once in your lifetime, you're going to rely on this coverage. Maybe if not you personally, maybe your children are going to rely on this coverage. And like you said, that's going to be a bad day.
Yep.
We don't need to make it worse by not having the proper coverage.
Right. I can say honestly, every time I come driving into this office, I see at least one accident going to and then coming home.
Oh,
so
interesting. Yeah.
Anytime you see someone on the side of the road, there's an accident, broken down, or something like that, there's a tow truck, there's some insurance company that should be covering that. You always hope it's not going to be you, but in the event that it is, that's where we come in to help our clients.
Yep. And you are literally the guy that your clients call when something does happen.
Yes. We don't always have fun phone calls. I had a very difficult month last month with some pretty nasty stuff, but comes with the territory. We do a lot of hand holding with our clients to make sure that, we are that first line of defense to, first of all, we want to make sure that they are okay first and foremost, but then also to put their minds at ease. As a lot of people don't know what to do in that kind of situation. So it's good to, say, hey, we got you, you're properly covered. Here's what the next steps are going to be. And then, we stay in communication.
Guide them accordingly.
Correct.
So, Myles, what's included under the PNC umbrella of products?
So there's a lot of different lines under there, but the main stuff is going to be, the auto, your vehicles, home insurance of any kind. So that could be, renter's insurance for an apartment or a home that you're renting. There's traditional home insurance for a site-built home, condos. And, if you're a landlord, you own an investment property that you're renting out to other people. That's all going to fall under that same home insurance umbrella. Then there's, umbrella insurance, which we talked about a little bit, but that's designed to protect your other assets. God forbid the auto or umbrella isn't enough to cover that liability.
It's like an extra umbrella of coverage, quite literally.
Exactly.
Got it. So there's some nuances that you and I talked about as we were prepping for this. We had so much fun because, like I said, a lot of people don't think about their coverage. And I'm also curious, let me get into that in a second. I'm also curious, I was thinking about this over the weekend. How do you fit PNC coverage into somebody's existing financial plan? Like, are you a part of that conversation with a financial advisor and with a client?
Absolutely. I've worked very closely with financial planners throughout my whole career. And if you're getting a financial plan from a planner, there is that page that talks about, here's your PNC coverage. And, if we didn't discuss it, here's some blanket recommendations where I've been able to, insert myself to say, hey, we don't have to just do blanket. We can get this down to the nitty-gritty detail of your own personal plan and actually custom tailor that page for them. So that is absolutely something that we talk about, because when you're doing a financial plan, right, it's usually geared towards, saving up to retirement or wanting to achieve certain financial goals. But one car accident or, one bad home claim that's not properly covered can destroy all of that. So I always say what we do protects what the financial planners do. So it's always important, if nothing else, just to have a gut check review of what the client has in place. Even if we're not able to, move them over and incorporate them into our practice, we can at least give them recommendations on, hey, here's what you need to do to properly protect yourself and this financial plan that you're putting together.
Sure. So for everybody listening out there, if you're working with an advisor or putting your plan in place, you need to check your coverages. You need to make sure that your property and casualty is incorporated into that plan and covered, because that can ruin in one afternoon, or like you said, one bad day. It can put a really big hole in whatever you're planning for.
Yep. Particularly if you have young drivers on your policy.
Yes.
Those are driving 16-year-old liabilities. So, insurance and generally follows registration of the vehicle. So if your young driver gets into an accident in a car that's owned, insured, and registered to you, it's your personal assets that are at risk. So those are always a big opportunity to really have a review and make sure that you have the right stuff in place. Yes, it's going to be expensive, but again, it'll be easier to pay for that expensive insurance policy than to, have to cover a liability claim you weren't prepared for.
Yeah. In your experience, do you find most people are very, very price focused versus value focused?
Particularly now. As I mentioned before, with the advertising and everything, that's what a lot of people talk about, or the commercials are geared towards pricing. But because of, the pandemic and everything like that, the cost of repair and replacement of vehicles has just absolutely skyrocketed.
Yeah.
A fender bender that used to take, would be a couple $100, a couple of days to take care of, was taking months and, was costing thousands of dollars in, storage fees and rental reimbursement and the increased cost of labor. All that stuff is compounded, and insurance companies are increasing their rates in order to accommodate for that. So now more than ever, we are seeing rate increases across the board with everybody. So everybody is, price focused. They could have been with the same insurance company for 30 years, but now it's starting to get really expensive. So we generally say every 3 to 5 years, you should be looking at this anyway. But right now, everybody is very price sensitive because everything's going up.
Everything's going up and everybody's strapped.
Right.
How do insurance carriers create loyalty? Like you just mentioned, you could be with a carrier, a company for 30 years, and then you drop them to save a few bucks.
Yeah. So a lot of it has to do with their experience. There's P&C is a very service heavy industry. If you're buying a car or, you're going to be traveling and you need ID cards, or you're refinancing or doing something like that, there's a lot of little touch bases in this. So a lot of it has to do with claims experience. So if you do use it, how good was the claims experience? Did they fight you every 5 minutes to, get every single penny that you need? Or, if you're trying to add a car on a weekend or a holiday, are you able to do so? So it's generally how easy it is to work with them when you try to use them. A good online platform, if they have an app or something, that allows to do some self-servicing on their end. A lot of that stuff is what carriers use for client retention. In-house, personally, we are the servicing team because we represent a lot of different carriers. We are fully independent, so we're not handcuffed to anybody. So we do a lot of that, a lot of those extra touches, the white glove service. We are the first call that we get for anything related to our clients. So we make it more consultative as opposed to being, transactional, where, some of the, what we call captive agencies, where you have to be employed by them to sell and service their products. They want to get you off the phone as soon as possible. Whereas we actually establish a relationship with our clients and we become their go-to person.
I love that. And you're so right. I never thought of P&C in that way, that it is really a service, service industry. You really do have to be in constant contact with your clients.
Yeah. There's a million of us out there. So that's how we try to.
That's how you differentiate. And you are with them at their most vulnerable moments.
Yes.
Where they are the most upset, or could be upset, could be embarrassed, could be worried, could be angry, probably all of them under the sun in one given claim. But yeah, you are with them in those moments.
Yeah.
That's a lot for you all. So I want to go into, because this is the part where you and I had so much fun with, I want to talk about the aspects of our lives, or some of the toys that we buy that maybe people don't give enough attention to how it will affect their coverage.
Yep.
So let's start with, this was my favorite when you and I got into this subject. Let's start on electronic vehicles. Electronic vehicles are certainly almost all the rage, what everybody is talking about. I know so many people are saying in the next 10 years, that's all that's going to be on the road. I happened to buy a new car this year, and I was getting, there was two schools of thought. Some of my friends were saying, you're crazy, you got to go electric. Others were saying, don't, that's not going to last. So how do electric cars affect your coverage?
I am so glad you brought this up, because this is something I am personally passionate about. But electric vehicles are notoriously difficult to insure. They tend to be very expensive, even just getting them onto the policy. For example, I'll use Tesla as an example. When you buy a Tesla, it is manufactured from scratch. They build it, from when you leave, it starts manufacturing in the factory. So with that, you get that 17-character VIN. That's not in the system yet. So it's, we kind of have to figure out what's the price of the vehicle, all the details that go into it. Just doing that in one part makes it difficult to even just put on the policy.
Yeah.
But above and beyond that, electric vehicles only make up like 2 to 3% of the vehicles on the road. that means that, if there's ever an accident or anything like that, you have to go see a specialty shop to get it repaired.
Yep.
You have to have a specialty technician, which means the cost of labor is going to be even higher. But more importantly, the newer models, everything is just so interconnected and intertwined that something as little as a minor fender bender could end up totaling the vehicle.
Because it's going to take so much more money.
Correct.
To fix it, to give you the rental, to store the car,
to manufacture the parts that need to go in. And then once you get it, everything has to be recalibrated again. And then you have these storage fees for keeping it with that special mechanic. And so all this adds up, and the insurance companies are the ones that are fronting all the costs for that. Yes, you'll have your, deductible, whatever it's going to be. But, something as simple as a fender bender will just completely total the car. And then they have to buy a brand new car and start the process all over again.
Yeah.
With time, this will, get a little better. But as of right now, and for the foreseeable decade, I would say electric vehicles are going to be very difficult to insure, and they're going to be expensive to cover. So there's other things to consider outside of, I don't have to get gas anymore.
Yes. And I bet you I've never, in all my conversations around electronic vehicles, the cost to insure them has never once come up.
Yep.
Never once.
Yeah.
So I'm sure that could be a pretty shocking to folks.
Yeah. You need to look at them from multiple different aspects, not just, I don't have to go to the gas pump anymore.
Rough estimate off the cuff. We're not holding you to anything, Myles, but just in your experience, what's the difference to the consumer purchasing a regular gas sedan versus something like an electronic sedan, like a Tesla?
Sure. It could be something as little as, $300, or it could be several $1,000s difference.
Yeah.
Unfortunately, this is very catered to the individual.
Yeah.
A lot of people compare stuff. Oh, my neighbor has, better cars than I do, and they pay nothing. You can't compare yourself to anybody. It is all down to the specific individual as far as, where you live, your insurance history, your credit score, that kind of stuff builds your profile for the insurance companies.
Yep.
So unfortunately, you can't really compare yourself.
That's probably a common mistake too. A lot of people do.
Big time.
Yeah. Let's talk about that, because that's a great point, is that people compare themselves, or they think this coverage is one size fits all.
Right.
If you live in a similar house or you drive a similar car of similar value, you would expect the price to be the same, but that's not the case.
Correct.
What goes into, let's just talk about auto coverage, the underwriting process.
Sure. So some main things that insurance companies look at when determining those rates is going to be, how long have you been with your prior insurance carrier? How long have you had continuous insurance without a gap in coverage? What were your prior liability limits? And then they're going to look at, for most states anyway, it's going to be an insurance score, which does take credit into account. But it's also going to be, how good is your payment history? How often do you change? How many claims have you had? All that kind of stuff is going to be built into that profile. And then speaking to claims, there is a look back period as far as what insurance companies look at to determine rate. So there's generally two windows. There's one, a 3-year window where there's going to be a surcharge. So any accidents, violations, or anything like that within that 3-year period are actually going to increase your premium. It's going to cost you more to have that insurance. Granted, that's going to happen with whatever insurance company you're with, but they'll only change that at renewal. So if anything happens midterm, people are afraid, my rate's going to go up. Not immediately. Not immediately. They can only do that at renewal. The other look back window is a 5-year window, and that impacts things like, underwriting eligibility. So if you qualify to keep your insurance carrier, or even if you go shopping around, whether or not they'll be willing to take you. And also that determines your, claims-free discount. So if you have no claims within a 5-year window, you can get a little bit of a better rate. Speaking specifically to motor vehicle reports, that's moving violations and, speeding tickets and things, cell phone violations, things of that nature. Those won't always pop up on your current insurance plan, because it costs money to run those reports by every insurance carrier. So it'd be very expensive for them to do that every single year. But anytime you go to look at new insurance companies, they're going to be looking at that upfront. So, certain captives will do it after you've put the first payment down, or, certain independents will do the same thing. Whereas, we try to do that upfront to, make sure you're aware of what your current situation is, so that, when these things are going to start falling off, and, it's going to be more beneficial for you to shop around at certain checkpoints.
Yep. And you guide your customers through that. You guide your clients through that.
Correct. We give them the explanation as, what impact this has on their specific policy and their eligibility for other carriers. And then, hey, even if we can't touch base now, this is a good time to do it again, providing nothing else changes in the interim.
Considering that this coverage is mandatory, right? You have to have insurance to drive your car. You have to have home insurance to own home. It's not that you'll never be able to get the coverage. It's that if you have a low score, your coverage amount, your premiums are just going to be that much higher.
Correct.
Right.
Yeah. Sometimes, bad stuff happens to good people. Mm-hmm. It could just be a bad year where I don't know what's going on. I hit black ice or, it was raining and there were leaves and you get into a couple accidents. Worst case scenario, there's always an option of mandatory state offered coverage. Mm-hmm. On the auto side, it's what they generally refer to as the risk pool. On the home side, it's the fair plan for the individual states. Mm-hmm. It is coverage in the most basic form available. But if you're there for a reason. And that's more important to work with, a really good agent to then guide you as far as, when you can start looking at
You want to get out of that pool.
Correct. If you're there, you should know that you're there for a reason.
Okay. But, and we want to work to get out. Correct. We can get coverage that's more beneficial.
Correct. And that's when, we offer a lot of guidance in that space.
Oh, good. Great. Let's talk about flood insurance. This came up a lot in our conversations, a lot of misconceptions about what that is.
Yes. So flood specifically is excluded under any home insurance policy. It is not covered. So a lot of people think that flood is just, a body of water. I'm not near the ocean.
Yeah.
Or there's no river or anything like that near me. But insurance companies consider flood basically anything that is water from outside the home coming into the home. So it could be really heavy rains and, your gutters are overflowing. Then say your, natural drainage on your property isn't enough. That water comes into the house, not covered by your home insurance. That has to be a flood policy. Same rules apply to, if you have water coming up from under the home and, comes through a crack in the foundation or something like that. They call that groundwater. That's still considered a flood.
Still water.
Yep. So that is all considered flood. And so you don't need to be near a body of water.
Yeah. Most people think you need to be, you need to be on the beach where your house is literally going to be flooded.
Yeah.
In the most extreme circumstances. That's what I think of when I think flood coverage.
Correct.
And that's something that you have to opt for. Correct?
Correct. So they have different flood zones that determine, your rate and what you can qualify for. And so even if you're inland and, maybe you're at the bottom of a hill. So if there is heavy rains, it is going to come down to you. They refer to that as flood zone X. It's a preferred flood zone. Flood insurance for you is going to be very cheap and you're going to have a lot of different options for it. So, it's going to be under $1,000 a year. But I can say any flood claim that we've ever experienced has been astronomical. So, in the grand scheme of things, if you want to properly protect yourself, we always recommend, just
doing it, getting it. Yeah. Cause you're right. Whatever damage is done, you're talking about foundation work. You're talking about new flooring. Usually you're talking about structural repairs.
And if you have, a finished basement, that's going to be even more. Or if you store a lot of stuff in your basement, all the mechanicals are in your basement, washer, dryer, everything. It adds up very quickly.
So that's one of those spots where you should spend a little bit.
Correct. Again, perceived value. As long as you are okay with it, you want to make sure that, you are protecting yourself.
Let's talk about, my husband and I were talking about a pool this weekend. So let's talk about kind of the fun things like in-ground pools and, the kids were jumping on a trampoline over the weekend. Like, let's talk about all that type of stuff. Where does all that come into play?
So that is all covered under your home insurance policy. Generally, they want to just know, first off, with pools, there always has to be some form of fence or locking gate or something that protects you from someone walking onto your property and just ending up in the pool, on accident. So there needs to be some sort of protective measure to stop that. Same thing with trampolines. Generally, they just want to know that, there's the protective mesh. So again, there's something preventing someone from just walking in and getting onto it without any, additional intent or, accidentally. Jumping back to the pools, a lot of things where insurance companies can get a little iffy is if you have a diving board, leaping stones or slide.
All the
they don't
fun
want,
stuff.
they don't want you having too much fun.
Yeah.
But, even just growing up, I remember, pushing my friends off of a slide and, face first in the pool. Things happen.
Bad things could happen.
Yeah. And we live in a very litigious society. So they're looking for measures to prevent any sort of liability claim coming from that.
Sure. So if you have the trampoline, if you have the pool, but if you take the steps during the underwriting process to either get the mesh or put the fence in, it shouldn't really have an effect on your rate.
For the most part, they just want to know that the exposure is there,
Mm-hmm.
just so that, they know what they're dealing with. Because again, someone has to foot the bill. So
Mm-hmm.
they want to know, exactly what they have on hand.
Mm-hmm.
So yeah, you always want to disclose it. Otherwise they can, it could cause issues if you ever need to file a claim.
Myles, I'm asking this for a friend, of course. How do they know? How do they know these things?
Yeah. So
I don't know if you're allowed to answer that.
Of course I can. All these insurance companies have a lot of, technology. They subscribe to different, satellite imagery services, so they can take a real-time look at what the home looks like right now. Even before I came in here, I had an email saying that one of my clients has a trampoline that they didn't disclose when I asked the question. So now I have to go back to them to say, hey, you have this trampoline, you need this thing signed, and they're asking you to take it out, kind of thing.
Yeah.
So there's that. More often than not, insurance companies are now doing at least drive-by inspections of home, basically because they want to verify the condition of it. We can only do so much on this side of the desk, right? We're asking questions. We're asking, what year were certain systems updated? Is this stuff in good shape? That kind of thing. So, we kind of take the client's word for it, but they sign an application saying, yes, I agree to all this.
They do a test.
This is what
they're testing.
Correct. So just to make sure that is accurate, insurance companies will send someone to either do a drive-by and just, say, hey, what does this home actually look like? Or other times, depending on the circumstances, they'll send someone to do an interior inspection, because they're going to look of not only the condition of the home, but address any additional, liability concerns. One notorious one is if, people have a walkout basement because they're on a hill. If the hill is too steep, they'll want you to put a railing, on the side of your home. And so this is a very good talking point about when shopping coverage too, because a lot of it, everything is centered around price and things like that. If you're saving $300-$400 on an insurance package, but they're going to send someone out to do an inspection, they're going to usually find something.
Yeah.
So it's like, hey, you know what? Your roof is a little older than, you think it is. So now you need a new roof. So yeah, you were saving $400, but now you have to do a $20,000 roof job to keep it. So it's, you got to keep this stuff in mind when you're looking at this whole baggage.
You do. We had, we were talking about life insurance underwriting, and it's almost the same thing that people may fib a little bit or, underestimate, their weight or their height or their health. And, for the initial quote that may work, but once those doctor records come in, they're going to know what scripts you're on. They're going to know if you're in a healthy weight range or not. So there's no way around some of those facts. And it sounds like it's the same thing here.
Correct. That ER visit 4 years ago.
Yes, exactly. Yeah. So literally they can use satellite technology to check things out, or they'll do manual drive-bys.
Correct.
Is that disclosed? And is there a certain number that they'll do in your term?
So it's, if there's ever an exterior inspection, obviously they're going to reach out to the client directly to coordinate that. They can't physically go into anyone's property unannounced. But a drive-by, you could just, if it's a public road, they have every right to just go by and take a look and take pictures. That
would be scary to see.
Yes, it all operates within certain guidelines. But yes, they have full access to do this kind of stuff. Yeah, they want to
make sure.
Yep. You sign that contract that says, hey, you're going to insure me. So they have every right to go and check and make sure that it's okay.
Well, I know that in my house, if there was ever a car with a person with binoculars or taking pictures, my dog would go absolutely crazy. So tell me about that. Yeah. Tell us about dogs.
Great transition.
Or any type of pet. Because I don't know, I don't know how that affects anything.
Yeah. So dogs are a big one. each insurance company has a list of non-preferred dog breeds. Unfortunately, like
non-preferred.
Yeah.
What a sad term.
So it's generally, it's going to be your pit bulls, your Rottweilers, Italian Mastiffs, something, they have a lot of terrifying actuarial data that all goes towards, how they determine these types of things. So they just want to know if there's a dog in there, what's the breed, if it's acceptable, then, has it bitten anyone? Because a dog bite is covered by, your home insurance as part of your liability. So even if you have a dog in there that's on the preferred list, if they have a dog bite on there, that can disqualify you for coverage.
And the bite could be to a human or to another dog.
Correct. And there's generally a 2-year window, statute of limitations for them to file any liability claim. So it could be nothing. And then 2 years down the road, all of a sudden I have this pain and suffering. That's when you usually get a summons and they have to go back to it. So we've dealt with a couple of those in-house, and it's never good, but it is, it would be covered, but then afterwards you do end up in generally an excess market, which is, kind of in between what we call the fair plan and the standard level of coverage. Is kind of in between, where it is expensive. It's not as good as the standard market, but it's better than the fair plan. But at least you will have coverage. And every insurance carrier does work a little different around this space. So everyone's going to have their different, dog lists that they have, or, if they're willing to accept a dog bite claim as long as the claim is closed and, or there's been a payout and the dog's gone through training, or, has been sold off, or God forbid, put down. Unfortunately, that does come up. But we deal with that kind of stuff all the time.
Oh, geez.
Yeah.
Chocolate Labs.
Yeah. Fine.
They're on the preferred list?
They're on the preferred list.
Okay, so Nutella's okay.
Yeah, Nutella's okay.
You told us a lot of places where we shouldn't skimp.
Yep.
Where we should make sure that we're covered. We want to sleep well at night. We don't want this to affect any of our assets or our financial plan. So we want to make sure we're covered. How do you recommend people do act in a smart way, that they do save money when there's money to be saved? What's the best way to do that for our listeners?
Definitely do your homework, and ask a lot of questions. If you don't know what something is, that's why this job exists. We do this for a reason. Ask a lot of questions, get a better understanding of what these things are actually meant to do. Because as you mentioned at the top of this, was that, a lot of the stuff that people think insurance is designed for is the optional stuff. Particularly when it comes to vehicles, your deductibles, that comprehensive, that collision, that's optional. Unless you're financing or leasing your vehicle, you don't have to have that. And that's to repair or replace your vehicle. Whereas, the mandatory stuff is the liability. That's where you're going to be, if you injure someone, damage someone else's property and they sue you, that's really what that's designed to cover. And a lot of the liability parts of the policy are not the most expensive. Particularly on home. A home of any kind, liability is one of the cheapest things to kind of maximize. So it's do a little homework, ask a lot of questions, and just, think of that worst case scenario that you want to be, it could be smoldering embers. It could be, a wreck on the side of the road. Like, what do you want to be prepared for? And how important is it to you to actually protect yourself?
Sure. Tell everyone where they could find you. Tell us, because it sounds like you are the man for the job. And I'm so glad that I work with you because you take such good care of us, myself and my family. But tell the listeners where to find you and a little bit about the firm that you work with. Sure.
So I do have a Facebook page, and that is facebook.com/Myles Holley BBA. And that's MYLES HOLLEY BBA. And that'll have all my personal contact information on there, email, as well as my office line. So those are the best ways to get a hold of me. And, Barnum Benefits is on there. We're a full service independent agency. We do everything soup to nuts. What we consider personal lines insurance, which is, for the individuals, as well as a little bit on the commercial side. You can always just go to barnumbenefits.com. You'll see our whole team on there, including my wonderful picture. And then, on my Facebook page has my cell phone information, my email, my Calendly link should be in there. So
Great.
All my contact info is right on there.
Beautiful. Well, Myles, thank you so much for joining us today. It was such a pleasure. You taught everyone so much. Everybody listening out there, head to Myles' Facebook page and you can find all of his contact information. And thank you all for being here.
Yeah. And I'll leave it with this. When it comes to auto and home, don't go it alone.
Oh, love that. Thanks, Myles.
You got it.
Thank you for listening to Master Your Money. Please rate, review, and subscribe on Apple Podcast, Spotify, or wherever you listen to your podcast. Every little bit helps. You can also follow us on our Instagram at Barnum Financial Group. If you're interested in connecting or working with a financial advisor at the Barnum Financial Group, the links are in the show notes of this episode.
All opinions expressed by the program participants are solely their current opinions and do not reflect the opinions their respective parent companies or affiliates or the companies with which the program participants are affiliated. Investments or strategies mentioned in this program may not be suitable for you, and you should make your own independent decision regarding them. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as recommendations appropriate for you. You should strongly consider seeking advice from your own investment advisor. Securities and investment advisory services offered through qualified registered representatives of MML Investor Services, LLC. Member SIPC, 6 Corporate Drive, Shelton, Connecticut, 06484, telephone number 203-513-6000.